What's up my people, welcome back to this amazing video today. So if you are a trader and you are in drawdown, this is your video. If you are a trader and you are in drawdown, this is your video, guys. So just wanted to, okay, every good trader goes into drawdown. Every great trader goes into drawdown. So the difference between a good trader and a bad trader is that a good trader is able to come out of drawdown, but a bad trader goes into drawdown and never comes back. So I just want to show you how I managed to pull myself out of drawdown as a trader, whether as a forex trader or as a crypto trader or whatever you're trading, commodities, stocks and all that. It's the same thing. Being able to come out of drawdown is a big deal, guys. It sets good traders from bad traders apart. Everyone goes into drawdown. So what did I do? Because I was in drawdown, like I had a 10K account, and I slipped into drawdown. I was down like 950. So I was just shy of $300 before I lose my account. And basically what normally happens is that most traders think that they normally focus on the maximum drawdown as opposed to the daily limit, the daily drawdown limit. So the daily drawdown limit is what puts most traders out of business. So your business is to watch the daily drawdown limit, but most traders watch the max limit, the max drawdown limit. So one thing that most traders who are struggling normally do is that they trade on the lower time frame. Of course, there are those who normally succeed with it, but most success comes from trading the 30 minutes, 1 hour, 4 hour. So what I did, immediately I sank into drawdown and I could not be able to come out. What I did is that I just shifted to the higher time frame. I just moved from trading the 5 minute and the 15 minute chart right onto the 1 hour chart. So what happens is that basically my style is that I normally look, let's say if I want to be bullish, I look for a bullish pattern on the daily time frame, the same pattern on the 4 hour time frame, and the same pattern on the 30 minute time frame, the same pattern on the 15 minute time frame. If the same pattern replicates itself 4 times, the 15 minute, 30 minute, 1 hour, and the 4 hour time frame, I trade that setup. And if I'm trading if it's a sell position, I just look for the same setup, same bearish setup on the 4 hour, on the 1 hour, on the 30 minutes time frame, and then I just enter. So it helps me to not overtrade. I just take one trade and start looking at the 1 hour time frame. So this trade can run for like 5 hours or 4 hours or 6 hours. I'm just waiting for it to run until it's exhausted. And if you trade 1 hour time frame, I just realized that my win rate increased significantly to around 80%. But if you trade the lower time frame, your win rate comes down to around 45%. So if you want to significantly push your win rate higher, just increase the time frame. Just go up the time frame up to the 1 hour, and your win rate runs up significantly up to around 80%. So that's what I did. I just shifted the gears up to the higher time frame. by the way, I'm coming to you on the shores of the Indian Ocean, the low tide. It's just a low tide already, and it's been gone for like days. It's dry. So you can see from the background, these are mangrove forest. It's just the mangrove trees. So that's where I am. I'm just on the Indian Ocean off the coast of Kenya. So basically, most traders struggle to get out of drawdown. And one thing that will dramatically pull you out of drawdown is to trade the 1 hour time frame, the 1 hour chart, the 4 hour chart, the 30-minute chart. Those setups will get you out of drawdown immediately. That is the cure. Just look for the same setup that replicates itself across the 3 time frames: the 4 hour, the 1 hour, and the 30 minutes. If there is the same bearish setup, you enter. If there is a same bullish setup, you enter for a buy position. So that's what you do if you want to get. The other thing is that because you're trading a higher time frame, the other thing that you want to do is to reduce your position. So if you've been trading the one lot, you cut into 0.5 lot or 0.4. If you're trading gold or any other volatile asset like oil, you go down to 0.2 so that you reduce the volatility exposure. So if you're trading gold, you want to cut down to 0.2 or 0.3. If you're trading Euro USD, then you want to trade 0.4, 0.5 lots. So this lower lot position will allow you to be able to move up and down without causing you to be pushing you into a level of discomfort and make you need to exit the trade. So most of the time is that when you can enter a very good trade, but because you entered a huge lot size, the market is moving against you, you're feeling uncomfortable, you decide to exit, and yet the trade is a profitable setup. But because you exit, because the market has gone against you and you exit, so you end up taking losses. So the next day the same thing happens, the next day the same thing happens. So despite taking good setups or good trades that eventually run in your favor, but because you took a huge lot size, you end up being forced to exit your positions because they got uncomfortable for you. So you just enter a small lot size like 0.5. If you're trading a 10k account or maybe a 25k account or maybe a 50k account, you enter small lot sizes so that you can just close the laptop or close your phone and go and do what you're doing, and 80%, 90% of the time the trade will run in your favor. So probably you just want to position your take profit in a place where you are likely to get hits, so you don't put your take profit to way too high or way too ambitious. You just put it in the next position of resistance. The next resistance level is where you want to place your take profit. So in this trades, because the weight is very high, I don't normally put the stop loss. I don't usually put the stop loss because if you're trading the higher time frame, in most cases the trade will go in your favor before reversing, because the higher time frame is composed of very high volumes of money moving, and so the trade will go complete the cycle before turning back. So if you're trading the high time frame, you are assured of up to 90% win rate. So in very few cases will you get the trade going against you, and even if it does, you will not make huge losses because the high time frame moves very slowly. It moves very slowly. It moves at a very slow pace and moves very slowly. So you will be able to exit your position before you run into a big loss. unlike the lower time frame whereby the wicks are running mad, wicks are running up and down like crazy. You just find yourself in a huge loss. Then the next week you are in huge profit. So the high time frame gives you time to exit before you accumulate huge losses. So you don't need to have a stop loss on the higher time frame, because the market will go against you before it goes in your favor. And in most of the time, like 90% of the time, it will go in your favor. So that's it, guys. That's what I wanted to pass to you today. So the tips or the summary is that trade less, as in take less, reduce your positions. Reduce your positions, move higher on the time frame, like the 1 hour time frame and the 4 hour time frame if you can. But if you're starting, just move to the 1 hour time frame. It will pull you out of drawdown automatically. That one I'm very sure. It will pull you out of drawdown very, very fast. So that's a tip that I just wanted to drop. If you are in drawdown, increase your time frame. Increase your time frame. Move to the 1 hour time frame so that you start moving out of drawdown. And when the trade is running, just close the computer, close the laptop, close your phone, and go and do what you're doing, as long as you've made a good analysis. If you made a good analysis of the 4 hour time, of the daily time frame, the 4 hour time frame, the 1 hour time frame, and the 30-minute time frame, if you've made those analysis and all of them are bullish and they have the same setup, if it's a double bottom, all of them, you're confident that the trade will move in your direction in 90% of the cases. So if you have that analysis put set in place, enter the market, close your laptop, check after like 30 minutes, check after 1 hour, check after 30 minutes, check after 1 hour, for the next like 5-6 hours, you will see massive improvements in your trading. Whether it's crypto, whether it's Forex, whether it's stocks, whether it's commodities, whether it's metals, whatever it is, you will see rapid, huge improvement in your trading, guys. Thank you so much for clicking on this video, and God bless you.